Do you have a suggestion for a Rockstar Impact Podcast guest? Go to impactpodcast.com and just click Be a Guest to recommend someone today. This edition of the Impact Podcast is brought to you by ERI. ERI has a mission to protect people, the planet, and your privacy, and is the largest fully integrated IT and electronics asset disposition provider and cybersecurity-focused hardware destruction company in the United States, and maybe even the world. For more information on how ERI can help your business properly dispose of outdated electronic hardware devices, please visit eridirect.com. This episode of the Impact Podcast is brought to you by Closed Loop Partners. Closed Loop Partners is a leading circular economy investor in the United States with an extensive network of Fortune 500 corporate investors, family offices, institutional investors, industry experts, and impact partners. Closed Loop's platform spans the arc of capital from venture capital to private equity, bridging gaps and fostering synergies to scale the circular economy. To find Closed Loop Partners, please go to www.closedlooppartners.com. Welcome to another edition of the Impact Podcast. I'm John Shigarian, and I'm so excited to have with us today Nicholas Antoine. He's the co-CEO and managing partner of Red Arts Capital. Welcome, Nick, to the Impact Podcast.
Well, thanks so much for having me, John.
It's an honor to have you. We don't cover this topic a lot, so I'm glad you're here with us today to help us cover it in terms of capital going into making an impact. But before we get into what you and your colleagues and partners are doing at Red Arts Capital, tell us a little bit about your backstory, Nick. Where'd you grow up and how'd you get on this really impactful journey that you're on?
Sure. So I was born in New York and I'm living in Chicago now, but originally from the East Coast. My dad's an immigrant. He's from Trinidad and Tobago. And my mom's from Queens, New York, Irish descent. And so only in New York would you find that interesting mix.
Right.
And I grew up in New York and then New Jersey. I went to college at Princeton and then went into finance as my career. But, a little bit of my background is and how I kind of got into investing, is kind of a twofold story. When I was a kid, I really loved investing. I don't remember the story, but my parents told me that I came home and one day from school and said, I wanted to invest in the stock market. I think I was in third grade.
Oh, wait a second, Nicholas. First of all, I'm from Queens. I'm from Little Neck. What borough did you grow up in? Manhattan, Queens? Where did you grow up?
Yeah, so my mom's from Middle Village. My stepfather's from St. Albans.
Okay.
First home was in Jamaica, Queens, and then Upper West Side, then Long Island City, and then Princeton, New Jersey. I moved to Princeton.
Gotcha. And so when you were going to school in Queens when you were growing up, when you were in third grade?
In third grade, I was in New Jersey. I actually have a photo. Maybe we can send it to you here. Actually, I don't know if you
show it.
Hung up yet. But this is a picture of me when I was in third grade.
My God! You were killing me in Princeton when you were a kid. What were you doing there?
This is
Is that the Wall Street Journal in your hands?
Yeah. So
my God, that's awesome.
I have been interested in. I had to find a place to hang it. Interested in investing since I was really young. But as a kid, you try lots of different things out. I also had a big passion for music, and they kind of intertwined when I got to college. And really, kind of how I got really seriously into investing was in college at Princeton. I was trying to figure out a way to spend all my free time practicing, but I also wanted to make sure I made some money. And I thought, well, maybe I can invest some of my money that I had saved from playing gigs, and I played in New York and weddings and things like that. I played saxophone. I could invest in the stock market, and that would give me hours to practice. What ended up happening was I had a lot of beginner's luck, and before I knew it, I found myself investing more of my time into learning how to become an investor than I was practicing music anymore. And so by the time I got to my senior year, I already knew that's what I wanted to do, is I wanted to become a professional investor. So that was a little bit of the backdrop
who
there.
had the fight? Like, where'd you get the finance bug from? Was your mom, dad, or stepfather in the finance world, or who inspired you on the finance side? That's fascinating.
Yeah, I think is actually, as I was thinking back on this, I think my stepfather really influenced me a lot on that. My dad was an entrepreneur. He owned a restaurant in Brooklyn. And so I got that entrepreneurial bug about business. He was also an immigrant. And I think that was really important to him to have, the American dream was really important, is really important to him, that, you have the opportunity to build something.
Yeah.
So I got that part of the business acumen from him. My stepdad was a big believer in independence and independent thinking. He saw things from a systems perspective. People talk about first principles thinking. That's like a kind of a catchphrase now in the venture world. But that was something that I was taught as a kid, was to think about society and rules, physics, laws of physics, but just things in terms of systems, and what are the constituent pieces that go into it. So he taught me how to think that way. And then he really believed that investing allowed you to have the freedom to live the life that you wanted to live. For me, I found it just a really fun exercise of kind of putting a puzzle piece together. I think I've heard David Einhorn say that somewhere. And it's kind of like a mix between that, to me, and also kind of investigative journalism. I love reading. And so to me, it was the intellectual part of it, but I grew up being told how important it is to think independently, to not go with the group and group think, to think for yourself. And so that was really instilled into me. And I think that's where it came from.
When that picture was taken there, were you already a young boy taking your allowance money or any money you earned and putting it into the stock market? Did you go with one of your parents and open up like a Dean Witter or a Charlie Schwab?
Yeah. I remember my first pick was Compaq. It was a stock. It was a good pick at the time, but my parents took me to Merrill Lynch. I had some money from my grandmother and some allowance money, and I put it into that. And then I invested in Intel. It was like basically things that I knew around that were tied to computer games.
That's so awesome. But you were investing in what you knew. It's the Warren Buffett theory of investing what you know.
Exactly.
That's awesome. So, okay, you got the entrepreneurial bug from dad, who had the restaurant, and then you had some of the financial background from inspiration from stepdad and the intellectual challenge. And so you're at Princeton and you're deciding you're going to go into finance and you're going to walk, you're going to do a gentle fade from the saxophone dream.
Yeah, and so what happened was basically I came across a book called The Intelligent Investor, and which was written by Ben Graham, and it was kind of the kind of more layperson synopsis of his famous book, Security Analysis, from 1934, and it had in it annotated notes from it had been updated since the 60s, when I think the book originally came out, or something like the most recent edition. And I just loved it. It just made so much sense to me. And that just sent me down this rabbit hole. So I started reading everything I could about, Warren Buffett, but lots of other people. And there was a book called, I mentioned David Einhorn already, Fooling Some of the People All the Time. And then in there, he talked about all these other hedge fund investors. So I just started kind of investigating more and more. And eventually what happened was that Princeton at the time didn't have accounting courses or, it's more liberal arts. Buffett had gone to Columbia for business school. So I took myself up to Morningside Heights and I went to Columbia and I said, hey, I want to audit classes that Buffett audited. So I took security analysis, I took accounting, and just for my own benefit and just to learn. And, he had reading lists. Charlie Munger had a reading list. So I just started reading everything they said that, we're supposed to read. Of course, you read their annual shareholder letters, just everything I could get my hands on to understand how they thought. And that was kind of the beginning of, my journey. But pretty quickly I realized that this is what I wanted to do. And I have a kind of an intensive, obsessive personality. So when I get into something, I really get into it.
And Buffett being probably the most famous disciple of Ben Graham. He credits Ben Graham with basically influencing his approach to investing, correct?
Correct. I think value investing is, definitionally in public markets now is around PE ratios and things, but I think all good investing at its core is value investing, right? You're trying to find something that is, worth $1 and you're trying to pay. Just as my stepfather taught me, when you go to the grocery store, you're looking for coupons, you're looking for discounts. You're trying to think independently and look at what the reality is and try to get value for whatever you're buying. I think regardless of what kind of security you're investing in, whether it's the stock, public securities, stock markets, debt, it's private equity, it's trading, whatever have you, you're looking for kind of dislocation between price and value.
It's my wife and I got very lucky. In 2004, I sold the .com. I started in 1998. As you know, Google was started in 1998. So we were part of that first big wave of .comers, and we got lucky, sold our company. And the best thing I ever did is we bought Berkshire Hathaway stock. And we actually have gone to his conferences. And I'll tell you what, it's the best stock I've ever owned in my life, the best stock I'll ever own in my life. And just going to one of his conferences is literally probably the most inspirational, most inspirational experience in my business career.
It's really incredible. So I went during that period when I'm trying to figure something out. And I remember standing in the line in the snow, like at 5 a.m. to try and get a good seat, outside the convention center in Omaha. But it's just,
that's awesome.
It's a one of a kind of experience. So,
okay. So we got, for our listeners and viewers who just turned in, we got Nick Antoine with us. He's the co-CEO and managing partner of Red Arts Capital. You can find Nick and his partners and his colleagues at www.redartscapital.com. It will be in the show notes, so you don't got to stop driving your car, walking your dog, or lifting your weights to write it down. It will be in our show notes. So, Nick, you're in your 20s. You're out of Princeton. What gave you the courage to then start in your 20s Red Arts Capital?
Yeah. So I knew I had interned at a hedge fund in college, and I knew that I wanted to be on the buy side. Oftentimes the steps, typically for investors, is they start first with a training at an investment bank, or some other type of financial services business, and then go into an investing role. And because I had been doing pretty intensive kind of self-education for a long time, I kind of already knew that's what I wanted to do, and I felt that I could learn the skills that I needed proactively. So again, taking accounting classes, and I took modeling courses, I took Excel courses. I just did everything I could to try to learn on my own. So by the time I was finishing college, I knew that that's what I was looking for, and I found a job at a firm called Princeton Global Asset Management, and I did equity research for them. And that was my first job. So I was still in Princeton, and I was ready to kind of move out of New Jersey and explore the world a little bit. And how the story of how I kind of came to the Red Arts part of my journey. When I was in college, my senior year, we came back from school. I spent the summer investing and reading 10Ks and things. And my roommate was playing basketball at Princeton, and he had interned at this firm called Ariel Investments. And Ariel was actually mentioned in The Intelligent Investor in one of the commentary notes. And he said, you got to reach out to this guy, John Rodgers. John's friends with Warren. And so he's also a value investor. So John doesn't use email. So I wrote him a letter, and sure enough, John called me. This is, again, I'm in my senior year of college, and I was in my dorm room. My roommate was with me, and he calls me, and sure enough, he's in Omaha, and he's planning to go see Warren. So you can imagine that reaction, my reaction to having a chance to talk to someone who even knew.
I just want to know who gave you all this courage. You got a lot of courage, my friend. There's not a lot of people in their 20s with that kind of courage. This is amazing. I love it. Love it.
Oh, to reach out. Yeah. I don't know where that came from. I just, that part is something I'd have to think about more.
That's
But
great.
I always felt like, if there's something that you want to learn,
Go for it.
yeah, you should go for it. And
Awesome.
so anyways, I reached out to John and he called me and we had this nice conversation about some of the stocks I was investing in. I asked about his business and we kind of stayed in touch. And we after we had the conversation, he said, "Well, why don't you come out to Chicago?" And he said, "All right, I got to go see Warren now." And hung up. And that was the end of the conversation, which was like, my
Wow.
mind was blown.
That's mic drop time.
Yeah, yeah. And John is such a wonderful, nice guy, and just a really, he's he's very thoughtful. He likes to help people. He puts other people first. And one of the first conversations we had was around early on in our relationship was around a book called Give and Take by Adam Grant, which is one of my favorite books. I don't know if you're familiar with it, John, but it's
I'm not. No.
it's Adam is a organizational psychologist at Wharton, and he's written a number of books since then.
Oh yeah.
This was a really interesting book about, some of the most successful people are those who see relationships through the lens of helping other people. And John really believes in that. I was raised that way. My father was born in Trinidad and Tobago in 1937.
Wow.
And, really in a really difficult economic conditions. And so in their community, it was all about, someone didn't have food or someone didn't have, support, the community helped each other. And so I was raised that way too, of, you try to help as many people as you can, because that's the right thing to do. And so we really hit it off on that and stayed in touch. I took this job in New Jersey, and then mentioned Berkshire. I'm at the shareholder meeting. I bought some B class shares, not A class, the time. And I'm in Omaha, and I was with some of my friends who had taken class. I'd audited classes with me. Turns out there were other people who wanted to audit, and we're at the bar in the Omaha Hilton, I think, across from the convention center. And in walks John, and Melody hops in, his partner, business partner, who's now co-CEO. And we just hit it off. And I was telling him, I'm looking at other things. He said, "Well, why don't you apply to come to our investment team?" And so I did, and I ended up in Chicago on their investment team. And by the time I got to Chicago, I kind of already knew I wanted to be an entrepreneur. I'd already started thinking about what kinds of businesses I wanted to invest in personally and own personally as an entrepreneur. The same kind of analysis that I had learned around analyzing businesses to invest in the stock market, the same idea about, what kind of entrepreneurial, endeavor that I wanted to embark on. And so when I met John, I wanted to be like Mike. I was like, I want to be like you. I love financial services. I love asset management. I want to go into that industry. I'd like to be an entrepreneur someday. And so after a while working on his investment team, there was an opportunity to become his chief of staff. And in that role, I got to see how the business was run. And you got to do a lot beyond just learning about investing. You got to learn about operations and fundraising and business strategy. And it was a real crash course in entrepreneurship. And so that was when I really started to think about starting an investment business, was in that role.
Got it. And then what was then the impetus for the big jump to start Rare Arts Capital? When did you start it, and who did you start it with?
Yeah. So the impetus was, I kind of knew this is what I wanted to do. I was looking at different businesses that I thought were interesting that I could start. And it was really kind of analyzing different parts of investing, public markets investing, private market investing, different asset classes. Where were my strengths? Where were my interests? Where were my weaknesses? And where are my skill sets? And going back to Intelligent Investor, one of the chapters talks about kind of the importance of knowing yourself, right? And I think that's really important piece of being an entrepreneur, as I'm sure you know, is you have to know if you have a strength, how to play to that strength as a person, that you can contribute to the business. And if you have a weakness, you need to understand what you need to bring to the table from others to kind of make up for that. It's a team-oriented sport. So I started realizing that, I really enjoyed fundraising. I loved the research and kind of deep dive stuff. But I didn't want to be a public markets investor for a whole host of reasons we could get into. I was thinking more about private equity, from the return perspective, some of the trends around, and actually I have on my desk here a book about ETFs and the history of index funds. And I just saw there was changes in the marketplace, and I thought there was a lot of upside opportunity in investing in private owned businesses. But similar to Ariel, where John had started his business, mutual fund business focused on small cap, I was thinking about smaller businesses. So how it came about was I was working the chief of staff role, and a colleague of mine at Ariel introduced me to Chad Strader, and Chad was at business school at the University of Chicago, and he was thinking about starting a firm as well. And we kind of got to talking and realized we had a lot of overlapping perspectives on private equity, and so that's kind of how it began. And the other piece of this was, I'm in these meetings with John, and again, he's just a team-oriented person. Lots of people come to ask for advice and for help, and so you're sitting there in these meetings taking notes for any follow-ups, and you're getting a crash course on entrepreneurship. Here's how I handled this challenge, or if I had capital issue, or whatever. And so after a while, you start thinking, okay, I'm learning a lot about how to start a business. And then he would often say there was just not enough entrepreneurship, particularly Black entrepreneurship in Chicago. You have legends like George Johnson and others in Chicago, many decades ago, and he was saying we need more of that. And more recently, we've had folks like Marty Nesbitt with the Fisher Group, and so I started feeling inspired by John to try my hand at it, and so decided to take the jump, and that was in 2015. And the goal, there was a lot of the blueprints for this business was based upon what I learned at Ariel's, particularly. The investing stuff, I learned a lot there, and I learned a lot on my own. But from an entrepreneurship perspective, I learned a lot from John that we applied, and a lot of it stemmed back to Ben Graham principles of focus. So knowing your circle of competence, and kind of sticking to that idea. So we wanted to be sector focused. We wanted to have an area of expertise where we could identify opportunities quickly. And so we did kind of a market mapping, and I looked at a lot of different businesses, and I decided supply chain logistics was a great place for a whole host of reasons to focus on. It's a massive part of our economy. At the time, it was not really a household phrase. That wasn't until COVID years later that it became top of mind for everybody. But there are lots of different types of businesses and many of the similar kinds of businesses. So we could look at the same kinds of businesses over and over and get smarter and smarter at identifying them. And also from a sourcing perspective, looking for companies for sale, right? Because it's not public markets, it's private. We knew that, my perspective was that we had to differentiate ourselves from competition. So there's another great book that I love called 0 to 1 by Peter Thiel.
Sure.
It talks about the best kinds of businesses are monopolies. And the reason is because they don't have competition. And it was an idea actually that it was kind of similar to some things I'd heard about in jazz, where, jazz musicians would say, Miles Davis had a famous phrase of, it took me a long time to learn how to play like myself. But there's only one Coltrane, there's only one Miles Davis, and only one Thelonious Monk, or take your pick, Michael Jackson or Barry Gordy. So they had an individual voice. You think about Motown, it's very distinctive. You can tell that's Motown. And then you don't have the competition because you're just being the best version of yourself. And so I thought a lot about that from a sector focus perspective. And if we map the market from a competitive landscape, there weren't many private equity players solely focused on supply chain and logistics at the time. There was one group that looked at big companies, but nothing in the small space that was institutional investment firm. And to our knowledge. And so we thought, wow, there's this big space. It's not a ton of direct focus on this. We could build a brand and expertise around it. And then when we go to banks who are selling and representing these companies for sale, we have something that's differentiated, and we're not having to explain why we're competing. We're the upteeth healthcare or SaaS investor. What gives us our right to win? Someone's attention.
You started the business. Sometimes I tell young entrepreneurs, picking their partners are more important than actually picking the idea, because every business is going to have ups and downs. You want people that you trust, and you're not always looking over your shoulder, and you're always looking forward. How did you pick your partners wisely?
Yeah, it's funny. When we started, we talked a lot about the. I was really kind of cerebral and in books and theory oriented. And so a lot of it was laid out. And then obviously I'd spend time with John. John has this extraordinary partner, Melody Hobson, who is now co-CEO of the business. And so I got to see that relationship, and that was helpful.
Right.
We thought a lot more about kind of what differentiates us competitively. It was only later that as we started working more and more that I saw that we had, complementary skill sets. But I would say, I completely agree. Business is about people. And at the end of the day, there's the 5 C's of credit, for banking. But in general, I believe that business is about trust. And you think about extending your trust to other people. That's the foundation upon which relationships are built. And so it's very important to me to think about, not just, my partner in my business, but all the other partners that we engage with, particularly our investors, which is really important, because you can't buy these businesses and you can't raise funds without support of great partners there too. So there's lots of different levels of relationships and partnerships, but it all comes back down to that core principle of trust. And I believe that what I learned from John, but also how I was raised of trying to help other people and leading with that was really a really important lesson around partnership.
What does Red Arts mean? What does the Red Arts part of it mean? Of the name of your company? Oh,
so we say that Chad's favorite color is red, and I love the arts.
That's how it came together. Red Arts. It's simple. I love it. So you decided your thesis was supply chain is something that you thought was underserved in the private equity markets, and that you could really master over time of doing it more and more. And that was going to be part of the future of trends of the world, that supply chain was going to be something that was going to be a growing trend, the necessity for it. And so that's why you went into that side of the business.
That's right. And so we started first, my background again in investing and research, and did a deep dive thematic investigation of a specific niche within transportation and trucking, the less than truckload space. And at the time, the market has continued to change, but in 1980, trucking had deregulated. Transportation, broadly speaking, was regulated for a long time, but from 1935 to 1980, trucking was regulated largely to protect railroads from disintermediation, and also to protect, ideally, the consumer. With Milton Friedman and some others like Alfred Kahn and other economists, there was a deregulation era going into the Reagan era, but started before that with Carter. And it opened up airlines, trucking, rail, and trucking for many years had been controlled rates, controlled lanes. And then suddenly there's this explosion of access to shipping, and anyone could buy a truck and be in business. Licenses still mattered, but what was very interesting about that gave the rise to massive truckload, right? So we hear of the guys driving from LA to New York and back and being away from home for 3 weeks at a time. That really exploded after 1980. But there's another part of this $1 trillion industry, which is less than truckload. So you think a truckload is one shipment, call it 40,000 pounds on a trailer, a 53-foot trailer. In less than truckload, it's somewhere between 20 and 25 shipments from different customers that add up to that 40,000 pound load. Very simplified. And they had operated under the rules of the regulatory era. And so as we did, I did a lot of research and reading about the industry and going to conferences. What we found was that the industry basically had these monopolistic characteristics because it was, instead of point A to point B, it was hub and spoke. So it was more like the postal service. The truck would go out, pick up industrial freight, 1,000-pound shipments roughly, bring it back to their terminal, like a post office, sort it and send it out. And so that created these network effects and these density effects, meaning lots of freight volume moving through their logistics network, that made it very hard to replicate, particularly because it was capital intensive. So it was expensive to buy the trucks, but more expensive to get the real estate to have those cross-dock facilities. And in the East Coast, it consolidated really quickly. And you look at door capacity kind of decline over a number of years after 1980. And so when we got there, it was about a $50 billion market. Half the market had been consolidated to about a dozen players. But then there were about 200 family-owned businesses, roughly, west of the Mississippi mostly, that had not consolidated. So if UPS wanted to deliver from Atlanta to Fargo, North Dakota, they would show a whole map of delivery, but they were still actually operating under that regulatory era dynamic, which was it would go from Atlanta to maybe to Kansas City, and then Kansas City would be handed off to another carrier, and who would then go bring it to Omaha, and then Omaha to Fargo. And that small carrier, that family-owned business, had basically a monopoly on delivering to towns of 3,000 people in these rural markets. And so we crunched the numbers, and looking at that space, I realized, it hadn't been consolidated yet. And we talked to lots of bankers, and we wrote letters, cold calls, we went to conferences. We got connected with probably about 30% of those 200 players, and we did a roll-up. So we raised capital from like my old boss John, his family office, and some others, Mario Gabelli, who became a friend I met through John, also a great value investor. And we did a roll-up of these businesses. It was really successful. And then the other part that was part of my interest in this space was that it's not just you just make the investment, then you can create value by improving the businesses,
right,
and adding professionalism, KPIs and metrics, improving sales processes. And so we worked with the platform business. That first business, it's like 50 shareholders, and the company was started in 1918. And so there was 5 generations or something like that in the business, ownership in the business. And so it was a family business, but they were open and interested to having kind of, professional oversight to help make the business stronger. We grew the business. We almost doubled the business's size organically as well. So that created enormous value. And we ended up selling that business to a publicly traded company called Knight Swift did a little over 7 times our money.
Wow.
So that was the first major thesis that we executed on. And it was
the first major thesis and win that you had. Big win.
Yeah.
And win. So how do you then, that's great. And now, no good deed goes unpunished. How do you get back up at bat and do it again?
Yeah, we've done that a number of times, and we started to grow out our team. And eventually we went and raised a fund, an institutional fund. And, again, I had the good fortune of doing some fundraising with John and learning how that worked. So a good friend, Justin Ishbia, who's here in Chicago, runs a firm called Shore Capital. And he gave me some really good advice of, build relationships early, show people the track record, and show them, say this is what you're going to do. And you come back the next time and you show that you made that progress. And so we had great relationships with folks like University of Chicago's endowment and others who had got to see our track record grow over time as we made more and more investments. We made 6 investments before raising a fund. And so by the time we were ready to raise, I built these great relationships with lots of different investors in Chicago and in New York and other places.
Nick, a supply chain got highlighted during COVID. Now that we're in 2026, what were the lessons that you and your partners learned from the COVID crisis in the space that you work in, and then talk a little bit about where we are today. There's not a day that you and I wake up and read the Wall Street Journal, the New York Times, or turn on Bloomberg, and AI is not all over the place. So how is AI and technology going to impact your industry, and how are you going to leverage that to, as you say, improve your investments and continue to grow your investments?
Yeah, so there's a lot of serendipity in business, as I'm sure you know as well. And you can work really, really hard, and then luck will have it that, changes things. And I think COVID, to an extent, changed people's perspectives around the importance of supply chains. Now, I think it's pretty clear now. But I think the government knows this, right? Like going back to, I mentioned the regulatory period. You go back, you want a good nighttime reading. You can look at some of the reports that were put out in the 30s. They were very focused. Rail was nationalized by Woodrow Wilson in 1917. You had standardization for kind of development of roads and for trucks during World War I. And that continued with regulation to protect the infrastructure that allowed for the efficient movement of supply chains. Napoleon talks about the first thing you do is secure your supply chain. So the government understood the importance and the criticality to the economy and to the quality of everyone's lives. I think as a household phrase, COVID really made people understand that too. I think a lot of investors started to wake up to that idea as well,
right? Because
of you can't get toilet paper, you can't get these things. You order something and it takes 10 months instead of 2 weeks, or what have you. It didn't really change how we thought about investing, which is again, we stick to our areas of expertise, but it is an organic process of learning, right? So you're looking for areas that maybe have been uncovered or misunderstood. You're looking for executives to partner with. Like recently partnered with this extraordinary executive, Elton Evans, who's executive chair of our produce distribution business, which is a cold storage logistics business and also a distributor. So we do that kind of work. I think to answer your question around what's changed and where are things with AI headed, I think supply chain also is interesting to investors because I think it's pretty clear that the front lines for a lot of automation is in the warehouse. It's on the road, and we see Waymo taking over, San Francisco, and I was just in Atlanta, and I was on
LA, Austin. I love Waymo whenever I'm traveling across the country.
Yeah, it's incredible, and the data shows as well that it's headed towards even more explosive. I mean, exponential growth is very hard for, I think, people to conceptualize, but we're at the base of a massive explosion. So I think many sophisticated investors understand that. So that was good fortune for us as we were fundraising, because we could say, hey, this is really important, and look at the value you can create for investors by investing in these essential services, and these critical services that enable and empower the rest of the economy to operate. I think AI and automation broadly, so you have a lot of AI, we talk about like agentic stuff.
Sure.
And but there's robotic process automation. There's a lot of different things tied to machine learning and large language models. I do think that some of this is going to happen. But I go back to history. Electricity was invented in the late 1800s. One of my favorite book series is Robert Caro's series on Lyndon Johnson. And Johnson famously, he's running for Congress, was going door to door in the 1930s, convincing people to sign up to get electricity in Texas. And, so it was 50 years later after electricity is invented or, modernized.
Yeah.
30% of the country still didn't have electricity. So I think it's going to take some time, the infrastructure to build out. It's the same thing with electric vehicles. You think about EV, there's 100 years plus of incredible infrastructure that's built to make it easy to get access to gasoline. Distribution network is very efficient. So it's going to take time to build it all out. Will the robots come? Yes. The question is when. But at the core of logistics, and this is where I think there's great hope for, people who may be concerned about this. You know, I think like if you take a look at like freight brokerage, for example, I think a lot of people think of brokerage is you're the middle person between the shipper and the trucking company or the other transportation provider delivering that shipment to endpoint, simplified. But having a conversation with a legend in logistics, Jeff Silver, last year at our conference, and Jeff talked about how brokerage is really about managing risk. You're taking on the risk that you're going to figure out how to get those shipments to the right places, and the complexity of that. While that can be, some of that can be automated and be helped through technology, when you want to have an understanding that someone is on the other side, that's still a human relationship. So it's still business, is still person to person. And I think there's an important role that people play in ensuring that there's trust, that when the machine doesn't work properly, or there's questions, or there's sophistication that people can't address, there's a person there on that other side of that relationship that's helping that function. So it's going to be a really interesting period of time, I think, for society to adjust to these new technologies. But it is quite clear that it is coming. And I think we will see it in supply chain functions early.
I mean, in '96, the ATM was developed or pretty much commercialized, and people said tellers would go the way, go away very quickly. Obviously, there's more tellers today in banks than there was even before ATMs were invented. But then again, when I was a little kid going up to big offices in Manhattan, there was big typing pools. And with computers, typing pools went away. So the question is, are the 80,000 truck drivers across America today going to go away? And with the truck version of Waymos in the next 3 years or 4 years, or is that going to be a slower transition, as you said, and human relations are still going to be very needed in the supply chain industry?
I think people are going to be needed for a very long time. I mean,
I agree with you, by the way.
So one, you just think about the supply chain of building things that could be automated. That takes time to roll out. So just because the technology is available doesn't mean Waymo can then just buy all the cars that exist in production, right? So that takes time just to actually roll it out. You look at the data center build out for AI, a lot of the challenges are supply chain related. There's not enough energy to get access to transformers and all this equipment. It takes time. There's a backlog. This is going to slow the process. We won't stop it. So that's the first thing. The second thing is, I think it depends, right? So one of the other reasons why going back to our first thesis, that I wrote was an LTL. LTL was also different because the drivers would get out of the truck. They would go into the back. They'd use a lift gate, bring the freight off the back of the truck, and you see that all the time in city streets and things like that. Well, until the robot can get out of the truck, walk to the back, it's an uneven pavement, and you get to pull down this 1,000-pound shipment, and then, it's actually not a dock. It's the back of a restaurant. There's reality that takes place, and that's where a lot of complexity is. Now, can it be addressed eventually? Yes, I do think so. But there's a lot of nuance. I mean, it's $1 trillion trucking industry, but there's a $200 billion specialty trucking space. There's where you're having to latch stuff on the back for cranes and on flatbeds, and you look at distribution, lots of different types of distributors. Like we look at aerospace distributors. There are things that it's much cheaper for a human being to do than a robot to do, and so I think that'll slow down the economic benefit, analysis for people of like, well, do I want to spend, $100,000 of CapEx on something that, won't return me that kind of rate of return? I mean, at the end of the day, business is still also about, capital allocation. So I think it'll take a very, very long time, but there will be areas that I think get automated. So there are some areas that are already being in logistics, freight audit and brokerage in some areas where agentic AI can scan documents and do all these things. I do think there can be some changes there, but you're still going to want people to double check and spot check. It's going to take some time.
Nick, how big was the fund that you raised when you started hitting your home runs?
So we raised a $270 million fund.
270 million. Give me one or two more examples, because I know we have a hard stop today of a couple more wins you had after that first big win. Tell us about one other big win you had that you're really proud of.
So I would say, if I can adjust the definition of win, I think people is a major win.
Of course.
We have a great group of folks on our team, and we've been able to partner with some really extraordinary executives to help guide these businesses to growth. So I'm really proud of the people that we've gotten to know and we've had a chance to work with, and those relationships we've built. And I'm really grateful for those relationships. And to me, culture is so important. And as you know, again, as an entrepreneur, and it's really hard to get that culture right. Talk about finding the right partner, the right culture too is really important. And it's an ongoing thing. It's not like you set it and then it's organic. It lives and breeds. But it starts with great people. And so if you look at some of the executives that run some of our businesses or help lead some of those businesses, we have really extraordinary leadership. Like I mentioned, Elton Evans. There's a gentleman named Victor Crawford, who was at president of Pepsi and Aramark and is running our contract packaging business. Stefan Freeman, who's running our warehouse business. Nelda Connors, who's an extraordinary executive. So I've been really fortunate to be able to work with some of these people and really grateful for their leadership. And so to me, that's a great win.
I assume you prescribe to Warren Buffett's methodology of choosing people to run your different divisions or your different portfolio companies. I remember when I was at his conference, they asked for questions, and a little 7-year-old boy sent up a question to the podium for Warren Buffett to answer. And he took that question. He said, "How do you choose the people to run the different companies you buy?" And he gave a very succinct answer. He goes, "That's. I'm glad you asked that." He answered the 7-year-old's question. He goes, "It's 3 things. It's brains, energy, and character. And if they're missing the third one, the first 2 will kill you." And I assume you prescribe to the same methodology of choosing the people to run your brands.
Yeah, absolutely. Character is everything. It's he said many iterations of that phrase, but it's so important to find the right people to work with.
That's right. I know you're not only a finance guy, you're also a music guy. You're walking into the biggest meeting of your life. What's the music you're listening to before you walk into that meeting to get pumped up?
Oh man. It depends on the day. Sometimes you go to the gym and you see someone with headphones on. You don't know if they're listening to heavy metal or they're listening to classical.
That's right. What's your go-to?
My go-to?
Yeah.
I really love Bruno Mars right now.
Oh, cool.
So that's probably my go-to. But I basically every genre of music, I could pick something that I love. So it's like depends on your mood of the day. But Bruno Mars is just upbeat and fun and happy. So I really enjoy that. His music.
Bruno Mars. I love him too. Nick, you've been great. I want you to know that, as you and I know, supply chain is an ongoing issue. It's so important in business now, and into resiliency and sustainability and impact. And the world is focused on it now. Entrepreneurs like me are focused on it more than ever, and countries are focused on it more than ever, given what we're going through and the times that we live in. So you're always welcome back on the Impact Podcast to share your continued successful journey at Red Arts Capital. He's Nick Antoine. To find him, you go to www.redartscapital.com. Nick, thank you for not only a wonderful hour with us today, but thank you more importantly for creating brands that have resilience, make the world a more resilient, sustainable, and just a better place.
Thank you so much, Sean, for having me. It was a real pleasure.
This edition of the Impact Podcast is brought to you by Engage. Engage is a digital booking platform revolutionizing the talent booking industry. With thousands of athletes, celebrities, entrepreneurs, and business leaders, Engage is the go-to spot for booking talent, for speeches, custom experiences, live streams, and much more. For more information on Engage, or to book talent today, visit letsengage.com. This edition of the Impact Podcast is brought to you by ERI. ERI has a mission to protect people, the planet, and your privacy, and is the largest fully integrated IT and electronics asset disposition provider and cybersecurity-focused hardware destruction company in the United States, and maybe even the world. For more information on how ERI can help your business properly dispose of outdated electronic hardware devices, please visit eridirect.com.